Hi LinkedIn, Happy New Year 2020. I wish that year 2020 brings happiness to all of us and it should be a successful year for all the businesses out there. So, since long we were trying to discuss on the investors. I had received multiple requests talking about how or when we should introduce investors into our business and what kind of investors are there in the market. So this entire today's video would be based on investors, though it is a very big topic. If we talk about investors, there are so many types of investors, and every business needs a different kind of investor. So if we have to categorize investor and lenders into different types, it would be banks and peer-to-peer lenders. These would be two kinds of lenders. And if we talk about investors, it would be angel investors, then venture capitalists, and then personal investors like people from your family or somebody from your relationship investing into your business. So the first point, if your business can run without investor, please go ahead and run your business without investors, because if you bring in investor, things change. Why? The first thing, even it is an angel investor, investors generally they come with a lot of liabilities. The first thing, if you want to introduce an investor, you'll have to have a very strong finance team, wherein you have to have all the data in front of you, the 5 years projection, then your purpose, why you are doing business, then what would be, how the business would be growing, and the exit plan for the investors. So all these things, it is talking about these things, it looks quite simple, but when it comes to laying down the plan, there are times wherein you do not know that after 5 years what will happen, or you've not planned. So I would suggest that if you want to get an investor, at least wait for a year. If the business plan is not such wherein you need an investor from day one, then things would be different, wherein there is high risk and you don't have that kind of money to start the business, and the business needs a lot of money. The idea is great, then you need an investor first and then you have to get into business. That's for sure, no brainer. But in case you are running a business, though you are making small profits, but you are running a business, in that case I would suggest that take some time, at least an year or two, for establish your business. Try to understand all the complexities of it, and plan out that if you will bring an investor, what all complexities you will have to face, like how you'd be planning your finances, then how you'd be because investor at the end is a lender, so he or she is giving you, the body is giving you money, and it is a period of 6 years. So by the time sixth year, mostly most of the investments are for 6 year, and by end of fifth year you have to you have to provide them an exit plan, as in how they would be moving out of your business and how they would be making money while moving out of the business. So in this case, you'll have a lot of, according to me, a lot of liability and pressure comes onto you, because you have to keep on scaling your business to that extent. And when we talk about investors, there are different kind of investors. So there would be investors who would be interested in growing your business. Then there would be investors who would be interested in operating your business, in terms of they must be having some kind of technical know-hows, or they have already run these kind of businesses that you are in, and they would be helping you to do a liaising or kind of agreement with different kind of business houses, so that your business grows. And there are investors who would be interested in selling you off after a time, in once the business reaches to a level wherein it can be sold. So what should be avoided while choosing an investor is, the first thing is, the investor should have a basic business idea, wherein the investor should have some kind of they should have done some kind of business. They should have this entrepreneurial acumen, so that they can understand you. The other thing would be, the investor should not be too much involved into the business. So some advices or some expertise, yes, totally agreed on to it. That is very much required, and that helps a lot when it comes to entrepreneurs. But if the investor starts diving into your business and they start explaining, they start micromanaging everything, in that case I would say you should refrain yourself from those kind of investors. Then there are a lot of investors who don't have that kind of money, so they'll go ahead and they'll get the term sheet in front of you. Then they will be paying you. Generally these payments, these investments are in tranches. So 1 tranche, 2 tranche, 3 tranche, 4 tranche, 5 tranches. So there is possibility they might give you 1 tranche, and after that they'll say that we are not having enough money, or we don't have money. In that case you get into a big litigation. And apart from that, there are investors who will always try to be bossy, try to get on your head. They'll try to so when you get an investor, there is always 2:1 ratio, wherein 2 directors, if your business has got 2 directors, in that case the investor will place 1 person from their body in your directorial board. So in that case, it's very important that the person who's sitting on your board, that person should be very much that person should have the understanding about the entrepreneurs that he's going to work, and you should feel comfortable working with him or her. So also avoid investors who ask you to sign very lengthy contracts wherein there are a lot of terms and conditions that are not explained, or hidden terms and conditions. In that case, there is strong possibility that tomorrow you will get into litigations. There is strong possibility that you won't be sure that what kind of problems you might face tomorrow. So always try to understand all the terms conditions that is being provided in the term sheet. Even if the investor says that this a general terms and condition that we provide to every company that we are investing, so it's then also you should hammer on all the terms and conditions, try to understand everything, so that tomorrow you do not get into problem. Then the last thing, if I have to explain about the difference between angel investors and venture capitalists, so I would say angel investors, they generally invest when the businesses are small at inception phase. 1 in 10 business plans they invest. So if, for example, 10 business plan comes to them, out of 10 they invest in 1. And if we talk about venture capitalists, they invest in 1 in 100. So this normal figure that I got from one of my investor friends. So generally 100 business plans come to these VCs, and they invest in 1 of the 100 plans, and they generally come into the picture when a business has grown to a sizable level, wherein the investment has moved beyond seed funding, and series A, series B has already started. So from series A, wherein the investment point has grown beyond, I would say, $1 million, then all these VCs, they pull in. So from 1 million to 100 million to 200 million. So this is where all the VCs, they come in for the bigger businesses. They have got their own expertise. They have got multiple portfolios. So all these VCs, they have got different kind of portfolios. Some VCs will invest into B2C kind of companies. Some VCs would be only interested in investing into software based businesses, SaaS. Some VCs would be invested into product based business. So every entrepreneur should know that what kind of VCs would be investing into it. And if you are going to approach VCs or angel investor, the first thing is that you should do is first plan out all the investors that are not going to invest in you. Try to pitch your business idea in front of them. First you rehearse, keep on pitching to these people, get all the ideas, try to understand that where your business plan is not working, and what all things are not there in the business plan, and then only hit all those investors that you like to have in your company. So I hope it gave you a brief idea about investors. I'd love to hear your feedback and the next video on which I should speak on.